Look, I think for the foreseeable, I think they need to prove that there's true independent sort of checks and balances between the board and senior management. And I think on some level, I think they need to start investigating, maybe bringing on a really seasoned operator. Elon has proven that he's a true visionary, and he's created an unbelievable product, unbelievable company, and broken through an industry that has been resistant to change for many, many decades. But we think it might take sort of a different skill set to sort of manage a company that is now a mass market, sort of $35,000 to $50,000 vehicle, 500,000 units a year manufacturer. So we're looking for more signs that they are embracing that concept and then separating that for the moment from the fundamentals.
I mean, the corporate governance issue certainly was a problem. I mean, I don't think anybody would say it wasn't a problem throughout the funding secure tweets, et cetera, with the scuffle with the SEC. But all throughout this time, there were actually data points. I'm just trying to play the other side of this. There are actually data points that indicated that Tesla was able to operationally fulfill a lot of targets. And most recently, if you were to believe the internal email sent by Musk to Tesla employees, that they hit 1,000 Model 3s a day, which would make the 7,000 target a week, within reach. It's actually performing operationally. So, at what point will you say the stock is moving ahead operationally, even though it doesn't have the corporate governance changes that you want? Because for a very long time, it had even worse corporate governance than it's got now.
Yeah, and we took issue with the Solar City acquisition a couple of years ago, and even though we've defended the stock historically, there still are significant execution hurdles ahead. Building out the Model 3, obviously it seems to be off into the races. Building into China is a monumental undertaking. They've released some details now and some timing in the early 2020s in that regard. The Model Y, the semi-truck. You think about an electric pickup truck. So there's still a long way to go, service and infrastructure, sales and on the other side as well. So building out a global enterprise here, we're still very early days. We think there are some execution-related hurdles there. And if you look into the fourth quarter, just to be very immediate term about it, they have tremendous pricing right now in the Model 3. Now, that'll ease into maybe a slightly lower transaction price over time. So, the question of, how much of the fourth quarter did they pull into 3Q, I think is top of mind for some investors as well. So we want to be cognizant of kind of where we are in terms of the evolution of the company. I think much longer term, I think we're more positively inclined. But this is a long overdue, I think, sort of call here for more streamlined kind of focus on operations and kind of corporate governance from an independent board perspective.
What needs to happen specifically, though, Jamie, for you to get to a buy rating?
I'd like to see who the two new directors that they nominate will be and what their backgrounds are. I think with the fourth quarter, if they can continue to sort of accelerate from the third quarter, I think that does de-risk sort of our concern that maybe they pulled ahead some pricing in the Model 3. So, if the fundamentals truly do kind of reach a new ground in the immediate term and we're proven wrong in that regard, we'd have to reevaluate. So any combination of those two things.